Hey there, welcome to the next lesson in my course on creating 5-year financial models in Excel. If you haven't seen the previous videos, you can find links to them in the description below. And if you want to download the Excel files and follow along, you can do so on the first link in the description below. Now let's get back to Excel. Here we have the group financials that you should have downloaded from the resources lecture, or you can also download them from this lecture as well. What we have here is 4 tabs with the financials for the 4 companies within our group, and also the financials for our contemplated acquisition. Those look pretty similar as they are from the same group. There are a few differences with this one here. So what we do usually is try to match the acquisition financials to the format that we're using internally. But let's go ahead and take a look at Minty Holding, our holding entity. This is like a corporate overheads entity. As you can tell from the lack of any revenue and gross profits, you only have expenses here, and those expenses are not directly linked to the 3 revenue generating entities, but those are more like corporate and admin functions. We have the income statement for the 3 years. We also have a balance sheet after that, and a cash flow statement. And this is basically the structure for the 3 statements that we'll be using to build a financial model. If you go ahead and look through the other 2, you'll see that the holding entity has the most extensive structure of income statement, balance sheet, and cash flow statement. So we take this as a starting point, and then we'll make sure to conform all the others so it will be easier to aggregate all the data together. The first thing I'm going to do here is just make sure that I save as my file so I'm not working on top of my historical financials. Before we start building our model in Excel, there's a crucial first step that we should always take, and that is to figure out our overall model structure. As you work on building more complex models, it is essential to have a pretty clear picture of how different parts of your model will interact together. What I'd usually do is I'll grab a piece of paper and I'll just sketch what are the main components and how they're going to work together. We don't have to go into too much detail, but it's a really important thing to do. So for our model, we'll have our Minty Dev entity, our Minty Pipeline entity, and our Minty Solid entity. We also have our Minty Holding, which we're going to call corporate, our overheads. And we're going to take the first 3 of those, and those will give us our core business view, which we'll build as a 3-statement view of the core business, the revenue generating business. We'll then build a model for our Rockcode acquisition. We'll build a model for our acquisition pipeline, which is our forward-looking, more distant acquisitions that are less clear. We'll also build a model for our new product launch, Minty Tools, and how this would impact our sales. And we'll create a simple tab for some intercompany eliminations between the 4 entities. Those will combine into our consolidated view. And actually, our corporate overheads will also be in our consolidated view because they're not directly linked with the individual entities. They're mostly related to doing acquisitions, the new product launch, and the overall strategy of the business. From the consolidated view, we'll start working on a few summary views that we can use for different stakeholders. We'll build a revenue and margins summary. We'll also build a valuation page that shows an indicative valuation of the whole group. We'll also build a step-up chart that shows how revenue progresses from year to year for the next 2 years while we're doing most of our acquisitions and our new product launch. We'll also have a few tabs to support all this. So we'll have a common sizes tab. And I'm showing that it's linked to the consolidated view, but we'll actually be using it across our acquisition pipeline, our new product launch. Then we'll have a config tab that would make our model more dynamic. It would allow us to switch different parts on and off. For example, let's say a specific stakeholder, a manager or the CEO or a potential investor wants to see how would the company do if we do not launch our new product. This tab would allow us to easily switch it off and everything will be updated to facilitate that. And we will also keep a changelog of our model, which is not something that's adding to the model itself, but it will definitely be extremely helpful for you if you have to revisit the model later on, or if you have to pass it over to someone else. And now it's time to go back to Excel and start building it out. What I'll do is just gonna add a new sheet and rename it to sources. I'll give it a black color. Just wanna make sure that I don't mess with my input files. Wanna always have those within my model, just to make sure that I can always check if maybe I copied something over and missed something or something like that. So instead of like working directly on top of those files, we're gonna leave them as separate tabs and then start working in a new tab. As our holding entity, the corporate entity has the most extensive list of line items in the 3 statements. I'm gonna use it as a blueprint. What I'm gonna do is I'm gonna add a new sheet, move it at the beginning, and I'm gonna use the apply formatting tool from the Minty tools up here. So my working title will be, now it's called Minty Holding, but let's just say corporate. My worksheet will be corporate. My company name is Minty. I'm working in USD in thousands and I'm gonna apply the style. So there I have it. Let me zoom it in a bit, make sure it's easier to see. What we want to do here is let's first make sure that we have the same structure for everything. I'm going to grab like all the way to column L, go to home, make that dark blue and make that white. Those are the colors I prefer. What I have here is I'm going to go ahead to the Minty Holding tab and just grab everything from income statement all the way down to the end. Paste it over here. Let me just double click here to extend this so that all the text is visible. You see that 22 now starts from column C and I don't have any space between the two. And in a lot of scenarios, we need to make some calculations on the side when we want to forecast like multiple years ahead. So what I usually do is just leave a few columns between where the years start and where my line items are. I'm just gonna press Control Space to select the whole column. And I'm gonna use Control Plus to add 2 columns, make those a bit smaller. Okay, and actually let's build our headings up here. So what I want is, I know that those are the actuals. So Control R to copy to the side, format it, and actual numbers always denote with blue to make sure that I know what those columns contain. And from here on out, everything will be, let's say, some form of gray. And let's just, as I have selected every cell out of those, forecast, Control Enter, and it's gonna fill the whole selection. Align to the right, bold it, and now we can just go ahead and maybe make them a bit wider. I don't like the fact that the years here are as text, because in certain ways I want to use them in, let's say, sum ifs formulas, so I need to be able to calculate something with them. I'm just gonna go ahead here and type in 2020. I'm gonna make the next one equal the previous one plus 1 and copy that to the side with Control R. Then we can select all years, bold them, and press Control 1 to bring up the Format Cells window. Just gonna go to Custom, and here in front of General, I'm gonna type in calendar year, CY, in quotes, and then an empty space. So that way those appear as years, but they're still numbers if I need to calculate anything with them. Then this, we can just make it equal the year above and press F4 2 times to fix only the row. Then we can copy it to the side with Control R. Gonna leave all those as they are, but gonna carry over the formulas to the side. Those two are also formulas. Control R to copy them to the side. Also drag them like that. Control R. This one as well. This one alongside, together with the check. And pretty much grab all those like that. And of course, I get a difference in my cash balance because I have the starting point here being the previous year closing cash balance, and I don't have anything up in the balance sheet, but we're gonna fix that pretty soon. We also grab this secondary header and paste it over here. And because we fixed the row, those are now pointing to the years above as well. Here as well. And this makes it much more versatile because let's say next year, when I start from 2021, just type in 2021 and everything is updated all across the headers. Now that we have the basic structure of the three statements, let's look at how many years we added. So we're going way too much, like 7 years in the future. So let's just stick with 5. That's a pretty typical range to forecast going forward for like strategic purposes. And something else that I'll add is also want to have a column with notes. I just make that a bit smaller. That's our basic structure for our income statement, balance sheet, and cash flow statement. Let's go ahead and start adding some assumptions. And the way this usually works is first we forecast the income statement, then we forecast the balance sheet, and then we use the cash flow statement to forecast the cash balance, which is the last item we do on the balance sheet. I'm gonna go ahead, select this row and use Control and plus to add a bunch of new rows. Here we'll have our assumptions heading, and I'm actually gonna grab this one, copy it, paste it over here, and this is gonna be our assumptions. And by the way, I want this on the top to stay here all the time. I'm gonna go to the 8th row, gonna go to View, Freeze Panes, and now this is always up here. Within our assumptions, we'll first start with our income statement drivers. Select the whole thing, go to the Home tab and make it bright orange so it's easier to identify. As we don't have any revenues here, what we can do is we can grow our total operating expenses at a certain rate and then have them split between the different expenses following the same average distribution from the past. This is a pretty common method of forecasting going forward. We see the trend of growth in the total operating expenses. We apply a similar trend or a trend adjusted with our strategic plans and our expectations. And then we distribute this following the same distribution between the different types of expenses. It won't be 100% correct, but for the purposes of a strategic financial model, it's more than enough because our whole concept here is to outline a rough picture of the future performance. Because the period that we are forecasting is quite long, we just want to have like a directional picture of where the business is going, and then we can apply some specific assumptions either within the different entities or within the different other elements that we'll be adding on top to move the needle in the direction that we plan to go. So to do that, first go ahead and say operating expenses. We are going to forecast this with the growth percentage. And obviously there's no way to calculate the growth in 2020 because we don't have a prior year reference, but let's go ahead and calculate it for 2021. So this is going to be equal to our total operating expenses divided over our total operating expenses in the prior year minus 1. And we get a 5.5%. Just format it a bit. copy it to the side, and we see that our expenses grew at 5.5 and then 9.7%. And here we need to make an estimate at what we expect going forward. And usually when you're building such models, you have a lot of discussions with management, with different stakeholders, and people responsible for different line items. In the current scenario, let's start with 5%. Gonna Control Enter to input it into the whole selection. And remember, because it's an input, I'm gonna make it blue and actually gonna bold it because it's a pretty important driver. It will be driving our total income statement. Let's go ahead and break out our operating expenses. So what I'll do is I'll just grab all the operating expenses from down here and paste them here, and also OB percentage of operating expenses. And sometimes it feels kind of redundant to note how you model everything, but keep in mind that in the future, when you have to reference an old model, a model that hasn't been updated in a long time, it would make your life much easier. And also, whenever you're building models, you should always approach the tasks with the idea that someone that hasn't been a part of building the whole thing would find it quite easy to understand how things work. Now we can calculate for the reference periods, we can calculate how much each of those line items was as a percentage out of the total operating expenses. So this is going to be equal to our salaries and benefits divided over our total expenses. And I'm gonna use F4 twice to fix only the row, so that when we copy the formula down and to the side, it would always reference the total operating expenses line. Okay, let's format that as a percentage. And what we can do now is copy it over to the side and copy it down. Also like to have those like highlighted somehow, that, and usually even have them in italic. And from here on out, I'll usually just start with a moving average of 3. Copy that to the bottom. What I mean is that since I have 3 historical periods, just use the average formula, grab the previous 3, but I'm not gonna fix those because I don't want the number to be the same for each year. I want some variability. So I'm just gonna leave it an moving average, which would mean that, let's say this year will be the average of those 3, this the average of the previous 3, and so on. What I can do then is just copy this to the bottom, and we would want all those to be equal to 100%, and sometimes this won't be the case. Here they're pretty flat, so it's always 100%, but what you can do is, if those are moving around too much, you can have this, instead of being moving average, being the difference between 100%. So then it would be 1 minus the sum of those at the top. And you can calculate those like that. For now, I'm just gonna leave it at the moving average. Just did Control Z to reverse it to an average, because I noticed that all those are pretty much equal to 100%. Now that we have this, we can actually build our income statement all the way up to the operating expenses. So what we're gonna do is we'll actually change this formula here. So we're no longer gonna be using the different expenses to calculate their sum for total operating expenses. Instead, this will be equal to the previous period's operating expenses multiplied by 1 plus our growth percentage. I'm gonna copy that to the side. And something else that I would usually do in such cases, because if you're looking at this later on, it would be quite hard to figure out that this is growth formula and not just a sum. So every time where I change the way a line is calculated, like mid-period, I would color it in a different way just to make sure that it stands out. And then what we can do is we can have our salaries and benefits equal to our salaries and benefits percentage of operating expenses multiplied by our total operating expenses. And I'm going to use F4 twice to fix the row so I can copy the formula down. Just Okay, copy this down, copy it to the side, and that's our expenses section modeled already. Now let's go ahead and finish our income statement. I'm gonna approach it in a similar way. We'll have our non-operating expenses here. I'm just gonna copy those from down here. Also add my taxes down here. Those will be, again, a percentage of operating expenses, and our other non-operating income will also be like that. And in this case, we have income. Pretty sure this is dividend income, if I remember from the cash flow statement. Yep, but probably won't always be income. So it's important to change this here, and we can just say expense income, and income is going to be the negative sign because we're accumulating expenses and then deducting those expenses. Copy that down to here with Control D. You notice that we didn't add this percentage of operating expenses to our interest, and the reason for that is that we won't be modeling the interest here. We'll model it as part of our debt schedule. But I'd still prefer to leave it in here, and I might even annotate on the side that it's part of the debt schedule, so it's just easier to navigate the whole file. And then our taxes will be a percentage of pre-tax income. Okay, let's calculate those. So the depreciation and amortization as a percentage of our total operating expenses. I'm gonna fix that with F4 twice, so only the row is fixed. I'm gonna use the format painter to copy the style over here. And I'm gonna have the same moving average of 3. Then I can copy this for my percentage of operating expenses for my other non-operating expenses and income. And since this here is an outlier because of the dividend income and it was 0 after that, I'm not gonna do any moving averages. Just gonna make that blue and just type in 0%. Control Enter to fill it everywhere, and just format it the same way. Also gonna bold it. Then our percentage of pre-tax income is going to be equal to our taxes over our earnings before tax. Format it as a percentage, and you can see it was 35% in year 1 because we had positive earnings before tax. That was mostly due to the dividend income. After that, we're generating a loss, so there is no tax. But what we can do is we can copy this here to get the format, and I'm just gonna set it at 35% because this is the tax bracket that this company falls under. Control Enter. And now let's go ahead and calculate those at the bottom. So depreciation and amortization will be my percentage multiplied by the total operating expenses, and we're gonna fix the row here. Be to the side, height after the decimal point. Although my other non-operating income is set at 0%, I'll still add the calculation here because I wanna make sure that if somebody changes anything above in the assumptions, it will be reflected all around here. And then for my taxes, what I want to do is I want to do an if statement and say, if my earnings before tax are above 0, then give me my earnings before tax multiplied by my tax percentage. And it says false because I also need to have otherwise give me 0. The side formatted as a number, and the way to test if this formula works is if this was 1,000, then we'll have 350 tax. Control Z to bring it back. The only thing that's left from our income statement is our interest. This is going to be calculated through our debt schedule. We'll be building this in the next video. Thank you for watching another part of the course. As soon as the next video is uploaded, you'll find it right here. By the way, if you can spare a minute, I would love to hear your thoughts on the course and whether it's living up to your expectations. If you're watching on the website, you can do so by the feedback button up there. And if you're watching on YouTube, just drop a comment down below. Thank you.